Welcome to TBR Talks. Today we have a special bonus episode with John Caucis and James Wichert to talk about what's happening in the federal space.
Thanks, Patrick. There's a lot going on. As I'm sure everyone's aware, there's no shortage of activity these days as the Trump administration and their Department of Government Efficiency has and continues to upend the market. Where we stand right now with our research in the federal IT market, we've published 3 special reports over the last several weeks detailing first the sphere of companies that we track, systems integrators, or FSIs as we call them, federal systems integrators, how we see them positioned to contend with the challenges stemming from DOGE, the Department of Government Efficiency, how we see them in terms of strengths and weaknesses, areas of opportunities. That was our first special report. And we've followed that up now with a series of reports that were a series of blogs, I should say, that we're going to refer to as the DOGE Impact Series. The first 2 of which, and they're following the earnings cycle of the companies that we track in federal IT. The first 2 blogs went to press recently. SAIC released their fourth quarter earnings a couple weeks ago, and we put together our thoughts on the impact of DOGE on SAIC, which I'll talk more about in a few minutes, as well as Accenture. Accenture Global released their earnings for, I believe, what's essentially the first calendar quarter of 2025. Their fiscal year is somewhat offset the calendar. So we got some insight from them on how DOGE is affecting their federal business. So you can expect to see additional blogs come out within a week or 2 of the company earnings. We already know when General Dynamics, for example, is going to be releasing their next earnings. CACI will be around the same week. This is in and around the week of the 21st of April. So that's upcoming. What we have seen thus far, 0 impact. And our next federal benchmark will be out in about a week or so, covering the 4th calendar quarter of 2024. And there was, for all intents and purposes, 0 real impact on the companies, aside from the uncertainty that has descended upon the market. We didn't see any impact financially. None of the companies that we track, they're still on track. Booz Allen and CACI, none of the companies that reported their fourth quarter earnings dialed down any aspect of their earnings, growth or profit-wise, as a result of expectations with respect to DOGE. In fact, Booz Allen, CACI, they elevated their guidance for their fiscal 25. Booz Allen's fiscal 25 just ended on the 31st of March. CACI's fiscal runs to June 30th. We haven't heard, although we will be keeping an eye, obviously, on their first quarter results to see if that changes. So no impact in the fourth quarter aside from the election itself and the qualitative uncertainty that has descended upon the market.
I think based on our last podcast discussion, all my vendors had already shared their earnings, so not too much to talk about on that front updates wise. But what I would say is interesting is now that the quarter's over and I've been filling out reports and everything, it would seem like award activity slowed down in the first quarter compared to prior years. And, maybe that's part of the uncertainty with DOGE. I would certainly say the newsrooms for several companies have slowed down. They're less willing to share information at this point. Like John said, a lot of the tangible disruptions, like you're not going to see it in 4Q, and we'll certainly hear about it in this upcoming earnings cycle. I think the tangible disruptions to a lot of vendors, and they're certainly undergoing chaos, but it won't be as drastic as I think a lot of people are thinking. So looking at all the contracts that have been canceled, Peraton's had something like $20 million canceled just in the first quarter. It was all work with, I think it was the CDC. And then you dig into that. That was like the total contract value of all their opportunities canceled. But then you dig into it, and each of the contracts are already largely done. Most of the funds are already obligated. And then, that's a similar story with a lot of the other vendors I track. Like, the total contract value is like, relatively high. You'll see like $100 million for some of them. And then you dig into it, and a lot of these contracts are already, the work's been largely completed. Most of the funds are obligated. So you'll certainly see an impact, and maybe some guidances. I know some people elevated their guidance in the last quarter. Maybe we see a little pullback on that, just given all the uncertainty all around. But I think the tangible disruption for like several of these vendors, it's not going to be the minus 10% or something that the market's expecting for this quarter.
But ICF, James, I believe, was one of the companies that had dialed down its guidance.
Yes.
But now, did they or did they not cite DOGE as a reason for that? Or
so for ICF, dialing down their guidance. A lot of that was at the time USAID was being heavily disrupted, and they already had some substantially like ICF is one of the smaller vendors we cover, and so they had like an over $100 million contract with USAID to do, I think it was demographic surveys. And that alone got caught up in that. They have additional work with USAID, so it significantly messes with their estimates for the federal part of the business. There's also the uncertainty of a large part of DOGE's disruptions have been in the federal health space, which is pretty much where like a huge chunk of ICS federal business is. Like I think 25% of it in 2024 was HHS alone. So for them, the worst case is 10%, assuming all their big fears come true. I think their best case they were saying was flat, and I think Maximus was in a similar spot, not nearly as drastic though. So I think Maximus's forecast is maybe, and correct me if I'm wrong, I think it was like plus 1% and then minus 3% overall, but the federal business wasn't expected to drive it down at the time. And all right, this is certainly like a tricky situation. There's a ton of uncertainty, and everything's like changing day to day. I mean, the big update I saw like a day or two ago was Musk may be taking a step back from DOGE, and his like special government employee status is set to expire around like May or June, and they believe they'll be able to reduce the U.S. deficit by like $1 trillion in that time frame. And then now very recently he's like, it was either last night or this morning, he's saying like it's not happening, it's fake news. But it is an interesting situation. Like, what happens next if he does go away? What happens to DOGE? And if the department does stick around and that Hulk smash approach, it's nearly over, it could really be an opportunity for consultants and FSIs to get in there and start working with them. Like, there's only so much they can broadly hack away at from agencies' budgets. And Patrick, I know you've like talked about how government is services before, and if you cut government, you cut services. So when you cut government spending, you're saying essentially that service isn't worth it. And at this point, maybe the vendors have a chance, if he does step away and DOGE sticks around and is changing its approach, it does have a way to pinpoint the remaining areas to trim down on spending. But the bigger opportunity would be how they can offer modernization services that enable operational efficiency. Especially as like tens of thousands of employees, if not like hundreds of thousands of like federal workers are, their jobs are cut. And like HHS has already begun the process of slashing 10,000 jobs.
Yeah, I'm glad you said the word uncertainty 4 or 5 times there. I think that's exactly where we're at. John, any other last thoughts?
Well, James makes a good point with respect to what services are expendable, what services aren't. I think that's still up in the air. And he makes another good point that I want to dovetail on, which is the amount of modernization work that still needs to happen. Yes, 5 years ago, the pandemic really put the spotlight on the dire need in the civil space in many cases for IT modernization. The DOD, the intelligence community, they've been much more, they've been ahead of the game in terms of modernizing, as you would expect. We have nation state rivals that we need to stay ahead of, or at least on par with technologically. And so they're much more mature when it comes to cloud computing, when it comes to AI, Gen AI, agentic AI, quantum computing, et cetera. But even with the acceleration in modernization that the pandemic drove, it sped up what was already a snail's pace in terms of the speed of modernization. It did speed that up somewhat, but not. There's still so much work that needs to be done. I mean, it's hard to gauge that.
Right.
But one way of perhaps looking at this is if you look at the federal IT budget in the last year of the Trump administration 1.0, it was about $92 billion. In the last year of the Biden administration, it was roughly, I think with the numbers that we're seeing now, are between 130 and 135 billion. The increase over that 4-year period is roughly $85 billion. If you look at the increase in cloud spending, it's not following the same trajectory. So we're trying to figure out, well, where did that $85 billion in additional spending go? Did it go to people? Did it go to technology? Did it go to software and hardware? And maybe that's what DOGE has been looking at, saying we had expected greater investment in technology, hardware, software. And we know that there has been some, certainly, certainly in the DOD and the intelligence community. But has there been enough investment there, or has it just been investing in expanding IT staffs? We don't know. That's another area of uncertainty. But the bottom line is this: the volume of modernization work is still, there's still a lot that needs to be done. There's a lot of work to be done there. So,
right. That's super helpful, John, because it's sort of there's how the federal government has to actually continue to operate. Things that you still got to keep the lights on, you still got to pay the bills. And then there's the federal government actually does need to modernize a lot of its IT systems. And then to James's point about, flat or, the worst case scenario, for a lot of these companies, that middle section that I just said, the modernization, that's going to provide them with the opportunity, even if there's chaos and uncertainty in terms of everything else going on. So, gentlemen, thank you very much. We will do this again, I suspect, in the near future, because change is constant at the moment and chaos rules. So talk to you guys probably in a couple weeks.
Thank you.
That's good.